Hello, welcome back to Core Finance. I'm Matt Brown, joined by Craig Erlam, Senior Market Analyst at Oanda. We're going to look at two currency pairs today, Kiwi versus dollar and dollar CAD. Starting off with the Kiwi dollar. Now, the Kiwi dollar and the Aussie dollar are actually being two very active currency pairs, so FX traders have been drawn or focused on these pairs. But we're going to look at the Kiwi dollar itself. Technically, what's going on and where can this go from here?
Well, I mean, there's a lot going on this chart right now. The one thing that's the most important for me is that downward channel which I've added. The reason why that's important is because when you see such a strong downtrend as we've seen, you're looking for the price action to make new lows, and if it continues to make new lows, then typically it's still in a downtrend. But ultimately, when you've seen the kind of drop-off that we've seen since the start of August, you're also keeping a close eye on momentum indicators, because you want to see when is the momentum running out, when is a bad time to potentially short. Now, I'm not saying that this is necessarily a bad time to short, but you're looking at the indicators here. The downtrend's gone from quite a sharp downtrend to something that's leveling out slightly. We have still made a new low. You look at the momentum indicators on the bottom, the MACD moving averages, the MACD histogram are both showing divergence. The stochastic is showing divergence. That is typically your red flag scenario. You follow that, and then we look at the most recent price. It's dipped down to test the previous lows, and it's fallen short. So what we've got here now is we've got a divergence that's formed between price and the moving averages. We've got a slowing of the downward trend, and we've made a new higher low potentially. Then that would suggest that we're maybe into correction mode. So something to keep an eye on here. We've had two touches of this falling channel. I'd like to see a third ideally, but if we don't and we see a break above, then for me that would still suggest that we are back into a bit of correction territory. You can ignore the Fibonacci retracement on there right now, because that was an old fib level moving off the previous low. For me, if we see a bounce, then your most notable level becomes 70. It's a big round number. I would expect a bigger correction, if I'm perfectly honest, because of the size of the drawdown that we've seen here. But that would be your initial test, and beyond there, you're looking at that prior support and resistance around 70, 50, 71. You can see that's long-term support and resistance, and then we're approaching the first move, fib retracement as well.
Certainly one to look at there. And moving on, dollar CAD now. This pair does seem to move a lot over numbers. It's quite volatile, yes, which is great if you've got that appetite for risk. Certainly in the FX space. So, from a technical point of view, it wanted to trade higher. We've had a bit of a sell-off. Where do we go from here?
Well, I think there's a couple of points that we've got to look at here. One, we have been sideways bound since the start of November. That's quite clear. You've got 129.25 to the top side. You've got 127 to the downside. So we've had a nice little trading range. Resistance around that 50 fib has been key throughout this period, so that's capped any moves to the upside. Price support and resistance has provided support to the downside, so quite a nice technical trading range that we've got here. In terms of where we go next, I'm not here to predict whether it will necessarily break above or below. We're looking for confirmation. When that happens, and that gives you next potential levels. But this is looking a little bearish right now, and I think that would be the better technical move, because should we see a break above 50, then that could be quite a bullish signal. But the fact that we've stumbled so much around here doesn't maybe take something away from how bullish that becomes. Whereas a break lower, you've got the bounce off the 50 fib, we're still below the 233-day simple moving average. We've got this nice double top that's formed since the start of November. So that gives you a nice possible price projection, which could potentially take back towards the kind of 124.50s, which is in that nice prior zone of support and resistance. It would almost mean that you're obeying the 50 fib, which would suggest this is a trend continuation. So from a technical standpoint, that would be the better, the more preferable breakout. And when you look at the candle from three days ago, that nice big red Marubozu candle, that's certainly a bearish looking candle. And then you look at the 3 days, which has now followed it. Very tight ranges, small consolidation, no bullish momentum. That would suggest to me that we're going to see a lot of downside pressure on that support, and should we see it break, then that could be a nice little breakout.
Fantastic. Craig Erlam, Senior Market Analyst at Oanda. Thank you very much for joining us.
Thank you.